Hi YouTube, what's going on? It's been a few weeks since my last portfolio update, so I do apologise, just been really busy. But yeah, a lot's changed since the last portfolio update, so sometimes it's probably better leaving it a few weeks between the portfolio updates because I'm pretty much rehashing old stuff if I do it weekly. Yeah, so basically I've had a bit of reconsolidation in my portfolio, and I've only got four companies in my portfolio now. And obviously the position sizes of some of them companies are much bigger. Can I just ask you all to smash that like button and subscribe to the channel if you're new to the channel? It's the DIY investing guy. I do regular free trade portfolio updates, and obviously I do is now the time to invest like companies on my watch list, and after I've done some stock research and analysis into these companies and whether I think they're a good quality business that's going to compound your money at a healthy rate over the next decade or so, in my opinion. Obviously, this isn't financial advice. Please do your own research into these stocks. It's not a recommendation to buy or sell any investments. I'm just obviously taking you on my own personal investment journey. Also, there'll be a link to a free share in the description of this video. So obviously just follow it, open your free trade account, deposit £1 and you can get a free share worth between £300 and £200. And at the moment they've got a special offer running till the 1st of August where you can get a basket of stocks that's worth £4,000. So you get put in a raffle for that. So it's always worth, popping £1 into your account, and you can potentially win £4,000 worth of shares, which include Tesla and other great companies. Yeah, so I'm just going to get straight stuck into the portfolio update for this week. Obviously, it's been 3 weeks since I've last done one. Sorry. As you can see, I'm still in the green. I've popped quite a few bit of money in this portfolio over the last few weeks, mainly due to the fact that Boohoo has had a bit of a slide in the share price. So Boohoo's what I've been buying over the last few weeks. I've also sold my Salesforce position at a slight gain, just purely because nothing to do with the company. I still like the company. I still think it's a great company. I didn't have a massive position size in the company. It'd gone up in price, and I didn't really want to buy any more at that price. So I just thought I'd sell it, because even if it did hit, went up to $400 a share, or doubled in share price, the most upside I can get from it is about £200. So I thought, Boohoo has had a bit of a dip in the last few weeks. I thought I'll put all that money back into Boohoo, and it's currently there sitting at $2.71 a share, whereas a few weeks ago it was $3.20, $3.30 a share. As you can see over the month, about $3.20 at the start of the month, and it's all the way down to $2.70 now. And obviously, I've in this portfolio 328 shares. At an average price, I've got my average price down to just over £3 a share, which I think is a good price for this. I think realistically, it should be trading at £4 a share at the moment, but I think obviously I've lost 10% on this stock at the moment in this portfolio, £100 loss. But it's while I'm building a position, I'd rather the share price be going down, because I will be looking to buy more of this company over the course of the month and after payday. But yeah, it's a great stock. Obviously, I think it would be trading at over £4 a share if it wasn't for all the controversy surrounding it, and obviously it's constantly getting bashed in the media for every little thing it does now. But yeah, it's acquired Debenhams. It's got a good online presence. There are a lot of negatives in the news about, obviously, its corporate governance and stuff like that, and there's certain issues, but it's not really translating out into sales and its revenues and its growth, because the people that are buying the products aren't the people that are reading newspapers and reading the investment pages of the newspaper. They're young girls, they're young lads, they're young, millennials, Generation Zs. They just want to buy cheap clothes conveniently. They get sent to their door, and half decent. What all the celebrities and influencers are wearing. So yeah, personally, I think that the business is going to flourish. Especially, it's just going to grow overseas. It's going to grow worldwide, and it's going to make a big impression with its recent acquisitions. And obviously, it's fast fashion. It's just got a great business model, and I think it's going to do well into the future. In like 10, 20 years time, it will be like the online version of what a next store is now. So yeah, that's my opinion on Boohoo, and I'm looking to build a decent sized position in this because I think it's a high quality company. One of the best British growth stocks out there at the moment, I think, and its valuation is just, it's a growth stock with a value investor valuation on it at the moment. Even if growth slows, it's still a good value in my opinion. Obviously, Tattoo Chef's had a bit of a pullback this month. As you can see, it started the month at like 21.5, so now it's at 19.5. It keeps on going back and forth between 19 and 20 at the moment, so there's nothing major. But obviously, with the news of the Kroger deal, I'm 5% up on this. I was like 20% up at one point, but 5% up. You know, I haven't got a massive position size in it, just over £1,000. So with an average buying price of £13 a share, which is roughly about $18 a share. I've got 74 shares, so I'll be happy to pick up some more shares of this. You know, I might have a nibble at it this month if it stays below the $20 mark when I get paid, and add a bit more to the Tattoo Chef holding, especially with the Kroger deal that's just been announced in the last month. That's definitely a high growth company with lots of potential. And it's not just that it's a high growth company that's growing revenues. I can actually see how it's going to convert all its revenues to profits in the future. I understand how that company's going to make money. So yeah, there we are with Tattoo Chef. Obviously Facebook, I did buy a bit more. Its all-time highs of about $350 a share. And then it had a bit of a pullback to the 340s, which I brought a bit more. Got slated on it for social media because I brought it at close to all-time highs, but I still think it's quite relatively undervalued for what type of stock it is. But then obviously in the last week or so, it's just had another bit of a big push forward. As you can see, it got to about 316 there, and then it had a bit of a push up to 350 quite quick there. So it went to 340 to 354. Then it had a bit of a pullback here where I brought some more, and then it's pushed back up further. So yeah, this is obviously with all the stuff going on in America about, you know, antitrust things and stuff like that, and then trying to do it's a tit for tat with Facebook and the government at the moment, senators and stuff like that. And yeah, that's always going to be a risk involving investing in companies like Facebook, but it's not a massive, huge risk. They're still going to grow. And looking forward, he wants to get into, I think Mark Zuckerberg talk about, obviously virtual reality and stuff like that, and in just revolutionising the way we socialise with each other. It won't just be like, you know, through a block on a screen and writing. It'll be through virtual VR basically. Obviously, it has the Oculus and stuff. It owns Oculus. Facebook doesn't. It's well into this AI and virtual reality part of it, and obviously it wants to be at the forefront and, you know, of the metaverse, as he calls it. It might sound mad and very futuristic, but look, 10-20 years ago you wouldn't have even thought that we'd have had these smartphones and the way we're communicating with each other now through social media. I don't think there's much risk to it. It's Instagram and it's WhatsApp being broken up. I don't think it has a monopolistic on social media. I just think it got a first mover advantage because you got people like Snapchat and stuff that's just had great earnings coming through, and I think that Facebook's just a first mover in this industry, and it has got a bit. It's obviously got a moat, a durable competitive advantage. It obviously has, you know, many components of the business, but I think it'll be, you know, it's got Oculus, it's trying for hardware, but I think the metaverse and obviously its advertising is just phenomenal, and obviously it's still got plenty of user growth to go around the world. So yeah, this company is definitely one for the next 10-20 years, and I think it's going to be a smashing company, and it's going to, you know, smashing returns on this company over the long run. I'm currently 20% up on it, £212, which isn't a bad return. I'd like a slight pullback in this so I can just pick up a few more shares, but I have got a bigger holding in my other portfolio. So yeah, there we go with Facebook, the metaverse. Obviously earnings this week with Facebook as well, Thursday after trading. So I'll be looking at that. That's the big earnings that I'll be looking into this week. There are a few more earnings, but Facebook's the main one for me. So yeah, I'll just have a quick look into the insights of the portfolio now. 98% is in stocks, 1% cash. I keep most of my cash in my bank account because it's so easy just to transfer over into the portfolio now. I don't really keep massive amounts of cash in the portfolio on the Freetrade account. Obviously, it's 40% weighted to tech, which is mainly Facebook. Obviously, Facebook being the biggest holding. Food and drink, second biggest holding is Tattoo Chef, and the third biggest holding is 27% is to Boohoo, which is fashion, fast fashion. So yeah, it's a very concentrated portfolio now. I only have 3 holdings, but I'd rather have 3 quality holdings. I don't see it's like Warren Buffett said, I could have 20 companies that I like, and if I like company 1 the best and company 20 the least, well, I'm going to be putting money into all 20 companies. Why not just put more money into company 1? So that's what I'm trying to keep. Just invest in my best ideas and my best companies personally. Obviously, the last month's not been great. I'm only 0.0%, 0.5% down in the portfolio over the last month, which isn't too bad. I'm not, considering the market's not really gone. Obviously, it's 1% up, so it's really just level for the last month. So I'm pretty happy with that portfolio. I think Facebook's held the portfolio together over the last 4 weeks or so. But that's what its job is as Facebook. It's a big growth company, but it's also a stable blue chip company as well that I think holds the portfolio together. And I want it to be one of my core holdings in the portfolio. So it's pretty much done its job and kept the portfolio together over the last 4 weeks or so. Obviously, being a high growth portfolio, when there's a little dip in the market, more stocks tend to lose more, which then I tend to see as a buying opportunity. And then when they go back up, they tend to go up more, as you can see here. So yeah, and then if I buy when the dips come, I always make more money when it inevitably rebounds. I just don't know when it's going to rebound. Sometimes the dips can go on a bit longer than you think. As point in case that I'll show you with my Alibaba holding in a minute. Obviously, for the whole time that I've been investing, I'm pretty much just slightly above the my benchmark, which is the FTSE All World ETF, which is 5% up, and I'm 5.5% up, which I'm more than happy with. Obviously, it's only a short term thing at the moment. I've only been investing in this portfolio for 4 months, so yeah. Obviously, as you can see again there, when I'm down in the market, I'm way down, and the market's just pretty much level. So you just got to ride it out, the highs with the lows. And I think in the long term, my portfolio will outperform the market over the long term. And obviously 5.6%, it's not too bad over a short period of time. But I'm obviously got a 5-10 year time horizon on some of these stocks. So I'm not really that fussed about how they're performing over short periods of time. Especially this year when I'm just building into new positions and building up the portfolio. And obviously we'll go to the general investment account, which I hold Alibaba in because I can, and mostly Chinese stocks, because for some reason in Freetrade you can't buy Chinese, and most of the Chinese stocks listed on Chinese stock exchange. I kind of get why, but there are other. It's just it's just the way that they sell the shares on the platform. So Alibaba. Obviously, as you can see, massive dip. Pre-market, it's actually, I think last time I looked, it was about $184 a share. So maybe in my main portfolio, I'd be looking to buy a bit more of this. I'd definitely be looking to buy a bit more of this if it stays at these prices in this portfolio when I get paid, and I'd add my monthly round of investing to the portfolio. I've now got 9 shares in this portfolio, nearly 10 shares, at an average price of 153. Now, if you remember when I started investing, the average £153, the average buying price was £175 a share, so that's gone way down as I've been averaging my price down, as obviously every time that Alibaba has dipped, and then it's had a little 1 step forward, 2 steps back with Alibaba. But I think over the long term, it's just going to be it's going to be a massive multi-bagger if it carries on. Especially with the price is going down, but the fundamentals are going up. So all that's happening is the price goes down, the fundamentals go up. So that makes the price worth even less, even if it didn't go down even more, because it's still more of a bargain, because obviously the company itself has got bigger, but the price has got cheaper. So it's just a classic value stock at the moment, even though it's a beast of a growth company. Obviously, this has got earnings coming out on the 3rd of August next week, and that'll be very interesting to look at. Obviously, I'll take some time and look at that because it's one of my larger holdings now as well. But yeah, it's not something it's not something you'd be trading in and out of to try and make a quick return on. It's something you got to be looking at maybe 5 to 10 years with this stock. And obviously, there's always going to be the Chinese regulatory risk there. So yeah, but yeah, I'm gonna keep on buying Alibaba while the prices are low, because I just think you could retire, and if heads you win, tails you don't lose much. But it's going to be it could be a big winner, and hopefully it will be a big winner. Fundamentally, it's got everything going for it: price, fundamentals, business operations. It's just a beast of a company, and the price, you know, it's cheaper than it was a couple of years ago, more or less the same. But the company's just expanded at, you know, like 30, 40, 50% a year. It's just not even. If that was if Alibaba was a US stock, it would be the bargain of the decade in terms of quality of the company and, you know, the valuation of the company. So yeah, it's a great stock, and I'm happy to be holding that for the long term. I hope you've enjoyed this portfolio update. Please drop your comments on what your thoughts are on my holdings. I only have 4 holdings in this portfolio now. Obviously Alibaba has been a bit of a struggle, but, you know, I'm not really fussed. It just means I can buy more over, you know, I've got more time to buy more, accumulate some more money to buy more Alibaba. And obviously I'd like to buy more Facebook. I'd like to buy a bit more Tattoo Chef, and I'll definitely be buying Boohoo because that's one of my favourite companies at the moment. But yeah, so what are your thoughts? I don't really want to be buying thousands of stocks. I'm only just starting these portfolios. I'd rather have a concentrated portfolio where I could put more money into what I think is a good value, into quality companies. And then obviously as time goes by, and I've filled out my positions and I'm happy with my positions, and these stocks start taking off, I might move on to some other stocks in the future. But what are your thoughts on my portfolio? Do you think I'm too concentrated and I need to diversify a bit more? Do you think there's better stocks out there? What do you think of the risk with Alibaba? What do you think with the risk with Facebook? Do you think Tattoo Chef's a good company? Do you think that meat alternatives and vegetarian options are going to be taking off over the next decade? What are your thoughts on Boohoo's corporate governance and how that's affected the share price? All these would be more than welcome in the comment section. If you've got any questions to ask me about my portfolio or about investing in general, please ask. Obviously it won't be financial advice, but I'll just give my opinion. I hope you've all enjoyed this video. Please smash the like button, subscribe to the channel, and yeah, until the next portfolio update, have a great time. I'll try and get some more videos out there as well. Thank you very much. Thank you.